Good morning everyone, this is Sakis Paraskevov, fundamental analyst at IronFX Global, bringing you the morning comment for the 20th of November. The dollar dropped sharply against its peers on Thursday after surging earlier this week to a 7-month peak. The dollar index pulled back from a peak of just below 100 to around 98.80, only to bounce up slightly above 99 again. We believe that profit-taking and repositioning are the main forces behind the moves, as the fundamentals are still in place and point to a December Fed rate liftoff. As a result, we would expect the dollar to regain momentum and appreciate again its peers in the next few days. The recent weakness in USD could provide renewed buying opportunities, especially against Euro, as expectations for further easing by the ECB at its December meeting are still intact. Therefore, the widening monetary policy outlooks between the ECB and the Fed is likely to weigh again on Euro-USD in the not-too-distant future. China's central bank cut short-term rates. China's central bank made another attempt to reduce rates banks charge businesses and consumers in a fresh move to counter deflationary pressure and boost its economy. The reduction is just one of many measures that the People's Bank of China has taken in the past year to try to support the country's economic growth. The bank has cut its benchmark lending rate 6 times in a year in order to deal with China's economic slowdown. However, those cuts apply to large state-owned banks that lend mostly to large companies, not to small businesses that could generate most of China's new jobs. In the meantime, the unexpected cut in the short-term lending facility increased the likelihood for further easing, possibly as soon as this weekend. The prospect for further easing supports risk appetite. Thus, we could see Australian dollar and New Zealand dollar continuing higher, at least temporarily. As for today, there is little in the way of news or market-moving data during the European session, with the only noteworthy release being the German PPI for October. In the event, the figure fell at an accelerating pace from the previous month, missing expectations of a slower decline. In Canada, we get the CPI data for October. The headline CPI is expected to have risen 1% at the same pace as in September, while the core rate, which excludes the effects of volatile items, is expected to have declined to 2% year-on-year from 2.1% previously. Coming on top of the renewed plunge in oil prices, another disappointment in the CPI data could weaken the Canadian dollar further. At its last policy meeting, the Bank of Canada warned that the lower oil prices and other commodities will weigh more than expected on Canada's economy. However, a possible decline in the core inflation rate could reveal that energy prices are not the only reason. This, alongside the bank's preference for a weaker loonie, could eventually prompt officials to lower rates in the foreseeable future. The country's retail sales for September are also coming out. As for the speakers, ECB President Mario Draghi, Vice President Vitor Constanzo, Executive Board Member Benoit Coeur and Peter Pryett, as well as Governing Council Member James Weidman speak during the day. From the Fed, St. Louis Fed President James Bullard and New York Fed President William Dudley speak. For more information, including technical analysis, please read the full comment on ironfx.com or download our app and get all the information you need to trade delivered directly to you. And also, follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Sakis Paraskevov, fundamental analyst at IronFX Global, wishing you solid trading.